Welcome back to Investing Talk Podcast. Today, we're taking an in-depth look at a question I know many of you might be asking. Is Bit Digital a good time to buy right now? We've pulled together some, pretty illuminating insights from recent SEC filings, investor reports, market analysis, basically trying to help you cut through the noise. Before we really get into it, if you're finding these discussions valuable, please do hit that subscribe button, maybe like this episode, and drop a comment. We appreciate it. And hey, if there's a specific company you want us to look into, just let us know in those comments below. We really do love hearing from you. All right, Bit Digital. It's a name that's certainly been making waves for a while, known mostly for Bitcoin mining, right? But its position in the digital asset space seems to be, changing fast. What exactly is its core business now? What's the data telling us?
Yeah, what's really striking here is just how quickly Bit Digital has transformed its operations. It's really not just a Bitcoin miner anymore. It's fundamentally shifted its focus. And if you connect that to the bigger picture, it really speaks to how dynamic the crypto industry is. Companies have to adapt, sometimes really drastically, or they get left behind. So this raises a pretty important question. What does this transformation actually mean for investors? For you?
Okay, let's unpack that transformation because the source material definitely highlights a major strategic shift. They've moved away from Bitcoin mining, their original business, to become primarily an Ethereum-focused treasury and staking platform. That's not just tweaking things, that's a whole new direction. What does that mean for their financials?
Right. This pivot is absolutely key. If you look at the fiscal year ending December 31st, 2024, Bit Digital reported revenue of $86.9 million. And interestingly, most of that came from ETH staking and other digital asset stuff, not Bitcoin mining. They managed a pretty robust gross profit, too, $72.4 million. That gives them an impressive gross margin of 83.4%. But, and this is crucial, they also reported a net loss of $44.2 million. Now, that loss was largely driven by non-cash fair value losses on their digital assets, paper losses from price swings plus operating expenses. It really highlights the volatility.
$44 million net loss despite that strong gross profit. That really underscores the volatility you mentioned. But their asset holdings, looking at those, they seem quite substantial. As of August 31st, 2025, they held around 121,252 ETH, valued at roughly $532.5 million. That's a lot. And they're actively staking it, right? Generating about 249 ETH in rewards just in August alone, which implies something like a 2.94% annualized yield. Plus, they own about 27 million shares of white fiber, which is another significant digital asset holding, though maybe non-core now.
Yeah, exactly. And putting that into context, their balance sheet looks pretty strong in many respects. As of Q2 2025, they reported $18.2 million in cash and cash equivalents. Add that to those huge digital asset holdings, you get a picture of substantial liquid assets. And critically, their total liabilities are pretty modest, around $7 million. And the company reports having no long-term debt. So that signals a very strong net cash and asset position. Plenty of liquidity. Even though they showed negative operating cash flow in the trailing 12 months, that, again, was heavily influenced by those non-cash adjustments from asset prices, not necessarily a sign of weak operations.
Okay, so minimal debt, lots of cash in ETH. Sounds like a solid foundation, especially in crypto. But what about their competitive edge? Our sources suggest they're kind of unique, being one of the first U.S. public companies really focusing on holding and staking ETH this way.
Indeed. Their edge seems to come from, a couple of things. One, they've built institutional-grade validator infrastructure. And two, they're vertically integrated, meaning they stake ETH directly themselves, not just through custodians. This direct approach, it allows for maybe better protocol alignment, possibly higher native yield by cutting out the middleman. But like you said, this model has challenges. It makes them highly correlated with Ethereum's performance, both the network and the price of ETH. So they lack the diversification you might see in broader crypto asset managers, which, brings up the question of how they manage that concentration risk.
It's a really good point, the concentration risk. It's a double-edged sword. Okay, these shifts didn't just happen. What have the last few months actually looked like? There seems to have been a lot going on, especially around that white fiber subsidiary.
Yeah, what's fascinating is just the pace. In August 2025, they completed the IPO for white fiber. That was a big strategic move, raised capital, gave them flexibility. They still kept a huge stake, though, 74.3%, valued at about $468 million then. Also in August, they put out their Q2 2025 results, showed net income of $14.9 million on $25.7 million revenue, and confirmed they'd gathered like 121,076 ETH by August 11th.
Wow, that is a lot of ETH. And it sounds like the move away from Bitcoin mining was very deliberate, very communicated.
Absolutely. Back in July 2025, their ETH holdings were climbing fast, over 105,000 ETH staked by then, and their strategic communications were really clear, planning to phase out Bitcoin mining completely, signaled a total shift. Which again makes you ask how this very focused strategy will hold up in such a volatile market.
And then June 2025, they formally announced they were sunsetting Bitcoin mining, basically closing the book on their original business. They also started a public equity offering then, looking for more liquidity, more growth capital. Seems like a really busy period.
Yeah, very active. And it did create some positive buzz. Sources indicate that during July, they highlighted institutional engagement, analyst coverage. Consensus seemed to be holding a strong buy rating with a price target quite a bit higher than where it was trading. So that suggests, growing confidence in some parts of the market about this new direction.
Okay, so with those big changes sort of in the rearview mirror now, what's next? What's on the horizon for Bit Digital? What should investors be watching for in the near term? Any potential catalysts?
That raises a good question about future drivers. Short term, the next big thing is the Q3 2025 earnings release, expected sometime in November. That'll be really key. And of course, their ongoing monthly ETH staking updates will be watched. Any moves to maybe monetize that white fiber stake could also move the needle. And, just the general macro environment for ETH price. That's always going to directly hit their NAV and revenue.
Right, ETH price is the big one. Beyond earnings and company updates, any other market events that could impact them?
Oh yeah, definitely. Our sources point to a potential ETF rebalancing event around September 30th, 2025. That could affect institutional flows into crypto assets generally. Also, around October 31st, 2025, those institutional 13F filings come out. That's where big funds disclose their holdings. So that could signal new big money interest or maybe validate the strategy for some. Those things, plus their regular ETH metrics, likely to drive trading volume, maybe valuation shifts if the ETH markets stay strong.
Okay, now this is where it gets really interesting for me, thinking longer term. What's the outlook there? And are there any, speculative rumors or wild cards floating around that could be catalysts down the road?
For the long term, yeah, a few things. Greater adoption of Ethereum staking generally would be huge for them. Clearer regulations around staking products, that's another big one. Or just, continued rises in the price of ETH. They might also look at getting into new digital asset areas or maybe strategic acquisitions to diversify a bit. That could be smart. As for speculation, well, market chatter suggests maybe an uplisting to a major index. If they keep their size, strategic partnerships with DeFi protocols maybe, or even further monetization or a spin-off of that white fiber stake. Some rumors even hint at them exploring AI-driven staking or treasury products using their computing power. That would be different.
AI-driven staking. Wow, that's definitely forward-looking. Okay, that's a lot to think about for the future. Let's bring it back to the present. What about the stock itself, the technical picture? For people watching the chart, what's the price action telling us?
Right, the technicals. As of September 5th, 2025, the stock's been trading in roughly a $2.25 to $2.85 range on the Nasdaq. Moderate volatility. Support seems to be around the $2.20, $2.30 area, with resistance up near $2.93. And with over 321 million shares outstanding, it's very liquid, easy to trade in and out of.
Okay, and what are the key indicators saying about the trend?
Well, the 50-day moving average is around $2.65. The 200-day is near $2.80. The stock's currently trading just a bit below both of those, which kind of indicates a neutral to bearish intermediate trend. No strong upward push recently. The RSI, the Relative Strength Index, it's sitting in the 45-52 range, so not really overbought or oversold. Kind of neutral there, too. What's maybe most notable technically is that its implied volatility is still higher than its peers, really reflects that sensitivity to ETH price swings.
Okay, so neutral trend, high volatility, which leads us straight into the risks, right? Because with any investment, especially crypto stuff, you have to understand the downside.
Yeah, this really brings up the question, what exactly are you signing up for here? Bit Digital's whole business model is super exposed to ETH price volatility and also staking reward rates, which can change. Both are pretty unpredictable. And having so much value tied up in just ETH and then that single white fiber investment, that's significant single name risk. If either of those takes a hit, the company feels it hard.
Right, the concentration risk again. And beyond just Bit Digital itself, what about the broader market risks?
Well, crypto stocks in general are just inherently volatile, right? Very sensitive to regulatory news, changes in technology protocols, token economics. Plus, just general market sentiment towards risk assets or digital currencies can cause huge swings, sometimes for reasons totally unrelated to the company's fundamentals. And regulatory risk, especially in the U.S. around ETH staking, that's a constant shadow, could really impact future revenue if rules change unfavorably.
So after unpacking all of this, the big shift, the financials, the potential catalysts, the technicals, and definitely the risk, what's the overall investment thesis? What's the takeaway from our sources?
If we try to connect all the dots, Bit Digital is, well, it's a really nuanced story. On one hand, you've got a strong balance sheet, hardly any debt, tons of ETH assets, that's good. But the business model is hugely leveraged to the price of ETH and how Ethereum staking evolves. That means limited diversification and just inherently high risk. The current technicals show that neutral momentum and relatively high volatility, which kind of reflects that underlying risk.
Yeah, it really sounds like a mixed bag, which explains why our sources landed on that overall rating of 5 out of 10.
So if someone's considering Bit Digital, what's the recommended way to think about it? Short-term trade, long-term hold, what kind of investor fits? This really gets to the core question for you, the listener. What are your own goals, your risk tolerance? Our analysis suggests Bit Digital is probably best suited for short-term trading. For people who want to take a leveraged bet on where ETH prices are going, it's maybe less suitable as a core long-term buy and hold investment for most people. Now, if you are super bullish on Ethereum long-term, the upside could be attractive. But you have to accept that the risks are definitely well above average market risk. It really is a direct play on the future of Ethereum itself. So just to sum it up, Bit Digital made a huge, decisive pivot into Ethereum staking. They've built up a strong treasury, shown massive operational change. Financially, their assets and low debt look good. But profitability, heavily influenced by non-cash stuff and, most importantly, the price of ETH. The next few months are key for seeing how they execute, whether institutions get more involved. But you absolutely need to keep a close eye on the crypto market and regulations with this one.
Okay, now here's a final thought, something maybe to mull over. Given Bit Digital's really unique, super concentrated bet on Ethereum and this direct staking approach, could they almost be a bellwether? Could watching their journey actually tell us something broader about how these specialized crypto companies handle the market swings, the tech changes, the regulatory fog in the coming years? What do you think? Thank you for joining us on Investing Talk Podcast. We really hope this look at Bit Digital helps you make more informed decisions. Remember to subscribe, like, and comment if you found this useful. And we'll be back next time with another look into the market.